Hi, welcome to DayTradeToWin.com. Today I'm going to continue with a few more candlestick patterns. I'm going to show some patterns that I have found to be quite accurate, quite reliable. Now, one thing to mention is that there are also other types of patterns in the market other than candlestick patterns, and those patterns are actually even more reliable and accurate than candlestick patterns, so that's something I will definitely cover in future episodes. And I'll also present complete trading strategies in future episodes, so that's something that you don't want to miss. So make sure you subscribe to our channel if you haven't done so already. But candlestick patterns, that's a good start, and today I'll present a candlestick pattern called the harami pattern. The haramis are reversal patterns, but they can also signal consolidations in the market. So when you spot haramis in your candlestick chart, then you should be ready for a reversal or just a consolidation, and you can then act accordingly. If there's a consolidation instead of a reversal of the trend, then you can also enter trades when the price breaks the pivot of the candle prior to the smaller harami candle. So keep that in mind. Just like the engulfing pattern I covered in the previous episode, the harami pattern happens over two candles, and there are both bullish and bearish haramis depending on if they occur at the bottom of a downtrend or at the top of an uptrend. The harami is like the opposite of the engulfing pattern. The second candle of the engulfing pattern is bigger than the first one. The second candle of the harami is smaller than the first one. Harami means pregnant in Japanese, and if you remember that, then it will be easy for you to spot the pattern in real trading. The harami is inside the range of the first candle, just like if it was the baby of the first candle. So let's take a look at the pattern. First, you would have a downtrend. You get a bearish candle, just like any other bearish candles in the downtrend. At this point, you would know that a harami is forming. But the next candle gaps up. In other words, it opens higher than the previous candle close. And then this second candle moves up and closes higher. The second candle's body stays within the range of the open and close of the first candle. That's the bullish harami pattern. The bearish harami is found in an uptrend. You have any number of bullish candlesticks in the uptrend. Then when you get a gap down and a candle closing lower inside the range of the first candle, that's the bearish reversal harami. It's always a good idea to combine candlestick patterns with trend lines. I covered trend lines in a previous episode, so you can go back and view that video. But once you spot a candlestick pattern, you can use the trend lines to confirm the pattern and the direction of the trade. If you find a reversal pattern like the harami, then use the trend line and wait for the break of the trend line before entering your trade. This way, you will filter out a lot of false signals and you'll profit more. If you find the harami and the market just consolidates and the trend line stays intact, when the price breaks the high of the first candle of the harami, that's a signal that the market is moving higher and you can trade long. That's it. That's the harami pattern and how to trade it. For more trading related information and tools, go to DayTradeToWin.com. Until next time, good trading.